Hey everyone, in today's video, we're going to walk through a common finance interview question that I had to answer multiple times as I was recruiting for investment banking, and even had to answer as I made my transition from banking to private equity. And that question is, how does $10 of depreciation expense flow through the three financial statements? In today's video, we're going to split it up into two segments. First, we're going to frame the question so we understand what the interviewer wants to test, and we can also set a good approach for answering the question. And second, we're going to answer the question by walking through the three financial statements. Now let's jump into it. When I was going through the interview process, it was always helpful to understand what the interviewer wanted to test. And for this question, the interviewer wants to test two different topics. One, do you know how the three financial statements flow together? And two, do you understand what a non-cash expense is and the impact that a non-cash expense has on the three financial statements? Now, for which order you should walk through the financial statements, you can do it in whatever order you feel most comfortable in. However, for me, I think it's the easiest approach to start with the income statement, go to the cash flow statement, and finish up with the balance sheet. And I'll show you why as I walk through it. Starting with the income statement, you'll notice that there's three different columns. First, 2020 actual, which shows the income statement results before any additional depreciation expense is added. The second column is 2020 plus $10 of depreciation expense, which shows the adjustments from having an additional $10 of depreciation expense. And third, change, which shows the difference between the first two columns. So starting off, you'll notice that EBIT, or earnings before interest and tax, as well as taxable income, is lowered by $10 because of the additional $10 of depreciation expense. And second, our taxes are also reduced by $4, assuming a 40% tax rate. So giving our taxable income decreased by $10, but our taxes also decreased by $4, net income only gets impacted by negative $6. Now going to the cash flow statement, as we just discussed, net income decreased by $6. However, we have to add back depreciation given it's a non-cash expense and no cash actually went out the door. So our ending result in cash is actually an increase in $10 because depreciation expense gets added back because no cash went out the door, but we also had the favorable tax treatment of lowering our taxes by $4. Now going to the balance sheet, as we just discussed, cash gets increased by $4, property, plant, and equipment gets lowered by $10, given depreciation expense lowers our amount of property, plant, and equipment, causing total assets to decrease by $6. And as we discussed in the income statement, net income decreased by $6, which flows into retained earnings, causing total equity to also decrease by $6, which in return has our balance sheet balance at negative $6 for total assets and also for total liabilities and equity. Now bringing it all together, starting with the income statement, $10 additional of depreciation expense lowers EBIT as well as taxable income by $10. It also lowers our taxes by $40 if we assume a 40% tax rate, which in return causes net income to decrease by $6. Moving to the cash flow statement, as we just discussed, net income decreases by $6, but then we have to add back $10 of depreciation expense, given depreciation is a non-cash expense, causing total change in cash to increase by $4. And going to the balance sheet, cash increases by $4 as we just discussed, but our property, plant, equipment decreases by $10, given depreciation lowers the amount of property, plant, equipment, causing total assets to decrease by $6. Now on the other side of the balance sheet, retained earnings decreases by $6 because, as we outlined in the income statement, net income decreased by $6, causing our balance sheet to balance out at -6 for total assets and -6 for total liabilities and equity. And that's how you flow through $10 of depreciation expense through the 3 financial statements. Now, hopefully you found this video helpful. And if there's any other topics in finance that would be helpful for me to create a video on, please let me know in the comments below. And thanks for your time.